Welcome to Classic Value Investors. My name is Mariusz Konieczny. Today I am interviewing John Polomny from Actionable Intelligence Alert. John, how are you?
Good. Thanks for having me.
John, I didn't really know who you were until you published your recent update on the tankers, and I thought it was just, absolutely fabulous. Summary of what it was, what the actual tanker thesis was. Uh, but what made you want to do it?
Well, I have a newsletter, and obviously, I do the YouTube videos to attract attention to that. But what made me do it is that, I have this, there's a lot of young guys or younger people that want to get into the markets, and they're making a lot of mistakes that I made when I was younger. I'm 53 now. And one of my goals is to try to help people not make the mistakes I did. It's not out of necessarily altruism, but the markets and owning businesses are a very good way to achieve wealth. And I find it, I think it's easier to learn from other people's mistakes and not try to make the same mistakes yourself. So I think what happens is people are drawn to the markets with the ease of trading via mobile phones, and you can open an account online and be trading immediately. The upsurge in people that are just flocking to Robinhood, and I think what happens is people are not prepared, or they have expectations that aren't correct, and then they get caught up in YouTube videos and specious arguments about things, and then I call it chasing the shiny object. So I had seen somebody had forwarded to me a video of somebody. I don't even know who it was. It was some guy making a video about it, and he was talking about one of the tanker companies that's not actually a very good company to speculate in. And the guy didn't really, his only argument was at the time, well, it was going up. That's why you should buy it. And that's not probably the best reason or rationale to do that. So what I wanted to do is actually for my own edification also is just to revisit the thesis, because there is a thesis behind it. It kind of feeds into my whole methodology and my view on how I speculate in the markets. I do want to make a distinction. There is a difference between investing and speculating, but none of this particular person wasn't really talking about some of the things that drew me to the trade over a year ago. And I just wanted to get on the record to revisit what I thought, to my mind, was the original thesis for shipping in general and tankers specifically.
So you've been on this trade way before the COVID started then.
Oh, absolutely. So, I follow the Charlie Munger maxim that I try to associate myself or um, cultivate a Twitter following or follow other folks. One of the best things you can do is create a well curated. Uh, you can follow people on Twitter. You have access to people on Twitter. Some of these people only have a few thousand or maybe 10,000 followers, and they are some of the best money managers and minds in the world. And you can actually have access to these people. You don't actually have to DM them or engage in the conversation. You can lurk. And so, what I try to do is I try to find good ideas and ideas from any source I can. I'm a voracious reader and uh, consumer of information, and then I try to distill that into ideas. So, originally I came to this idea. I do things on Seeking Alpha, and I was familiar with Jay Mintzmeyer and some of his things, and I've been following him. So I picked up an idea from him, and I started looking at it. And then Mr. Kupperman, I've known him for a while, and I kind of his original thesis when he was talking about it. Then I started doing the deep dive into IMO 2020 myself, and then the overall cycles of shipping and the fact that it's a cyclical industry, and I'm attracted to those because they offer such asymmetry if you catch the cycles correct. So, yeah, going back to the original thesis of, you know, um, the overbuild of ships a decade ago. This is what these guys do, right? They have an upcycle that lasts anywhere from a year to 2 years. They become cash flush, and then what do? They go out and buy ships because they want to have the biggest fleet, and this is how it is. You're in the shipping business, you want more ships. So that eventually causes the oversupply, and because this is a commodity market, I try to keep it as simple as possible. If there are 100 cargoes and 102 ships available, rates will crash. If there's 100 cargoes and there's 98 available ships, then rates have a tendency to spike. Just like in any commodity, the price is set at the margin. And it's not a hard business to get into, right? I mean, you're basically contracting with a yard in China or in South Korea and getting a ship built. You get the financing from some bank that will give you the money, and then you go find a Filipino or Ukrainian crew, and then you're in business, right? You just put it on the spot market, and there you go. So it's not curing Alzheimer's or cancer. It's not that hard to do. So I think we were many years bottomed out. These companies were barely making money or losing money, and that caused an atrophy in the fleet size. The ships became older, and then you start putting in the IMO 2020 idea, and then even IMO 2030, which most people aren't even familiar with. And so it's just like any other supply demand market. The supply of vessels, as vessels get older, especially in tankers, only have about a 20-year life, and then they're scrapped. But if you're not, we're at some of the lowest replacement levels that we've seen in history. It's just an inevitable type situation where the supply continued to contract, but that'd be being exacerbated by the IMO 2020 reg. So that was the original thesis. I just wanted to get that on out there for folks to take a look at, instead of just saying, well, this is the next shiny object, and I saw a YouTube video, so I'm going to buy.
Yeah, I'm gonna make sure that I link in the description to your update on the thesis because I again I thought it was just fabulous. But some of the other things that within the video that just were, I mean, I know we've heard about this before, but for example, you were talking about how you can get conviction, and can you talk a little bit about that? I don't want to put words in your mouth, but I just thought it was fabulous. Like people don't have conviction. How can they get conviction into a thesis?
So if you're a tourist, what we call kind of jokingly amongst some of the finance Twitter arty, if you will, we have what we call tourist season. So an idea lays dormant, or the guys that find it first, that are speculators like myself. The problem is that you don't know when this thing's going to turn. You find an idea which you believe is an undervalued commodity, resource, company, country, whatever, and you think that what I try to do is find a catalyst then, or as other people have said, I'm trying to look for something that's going for that is totally crappy, and it's trying to you go from terrible to less bad, and that can be a significant re-rating of a security. So what we're looking for is not just in being contrarian thinking. So that doesn't just mean saying, well, everybody hates tankers, so I'm going to buy it. What is the catalyst that's going to initiate a re-rating of these securities? So I kind of just briefly touched on that. I did that in the video. So what you need to have then is patience. You have to have patience for your thesis to play out because you don't know the timing of when this catalyst will take place. What I do is I think through an idea. I spend a lot of time thinking. I write down my ideas in a logbook. It's like, why do I feel this is going to happen? Why do I feel this particular industry is undervalued? And what do I believe is the catalyst that will cause a re-rating in this industry or this particular stock? And then I start building a position. And I continue to, what I called in another video, I do what's called red teaming. So, when I was in the military, we used to do exercises and we would have war games and we'd have blue team and red team. So the blue team was the good guys, us, and then we'd have some of our compatriots would be the red team, and they would be constantly trying to figure out how to get around our plan, disrupt our plan. They were the enemy. So that's what I try to do. Constantly question, why am I in this? Has the thesis changed? Because price can change every day. What can typically happen in these markets is you think you've caught the bottom, something's down 90%. You think that you understand it. You think that you have a thesis and you have a catalyst that you feel is going to happen for a re-rating, and then the stock goes down 30 or 40%. This is when you begin questioning yourself. And if you don't have the conviction and the conviction to hold the position and to wait for that re-rating, because I use this analogy. If you like tuna fish and tuna fish costs $1 a can, and you go to the store and tuna fish is selling for 50 cents a can, well, if you like tuna fish, you should buy more cans of tuna fish. So uh, the way you develop conviction to hold through this volatility, which you see typically at changes in markets or changes in direction, which you can see in these resource markets and these speculations, you can see something drop 30, 40, 50% or more, even after it's down 90%. But that doesn't change the plan. So in order to have that conviction to hold through or to add to the position, then you need to have full understanding and full research. Now, even if you have that, it can still blow up in your face. And I can give an example of that where I had to reverse course on a speculation because the facts changed. But that's typically what I was trying to get to in that is if you're just going to watch a YouTube video of some guy that you don't even know that's 22 years old and says you should buy this because the CEO is on Kramer and he said the stock's going to go up, then the first time the thing dropped, you don't understand the business. You don't understand the thesis of what the catalysts are that can cause a re-rating. You're just chasing a shiny object. So the first sign of trouble, you're a tourist and you're going to be chased out of the trade. And if you continue to do that, you're not going to be successful long term. Because what we're doing here, I'm not trying to turn $10 into one. I'm trying to turn $1 into 10 or $1 into 100, and that requires me to find mispriced securities and then buy and hold them until they are re-rated. And that takes time and that's painful. And it doesn't happen when you want it to. And the only way you can do that is if you have patience, and patience comes from conviction, and conviction comes from complete knowledge and understanding, or as best as you can get, uh, uh, that's superior to the average person, or what Buffett calls or Munger calls circle of competence. So that's kind of what I was getting at.
Yeah, that's interesting. Someone asked me the other day, how I deal with this psychology of when the position goes against you. How do you, protect the stop? And I was thinking to myself, over the years that I've been investing, I don't think I ever bought a stock that didn't go down on me at first. Like never. Even when I was buying in 2008, 2009, I was buying it cheap. They still went down 30% on me from the point that I thought I was getting an incredible deal. Um, but when you're talking about constantly revisiting your thesis, and when you understand what your thesis is, and I think that in the recently when people piled in into these names, I mean, for sure they didn't understand the thesis. They probably thought that contango or these sky high rates, um, and when those two disappeared, then they thought maybe that the thesis changed. But according to you, contango and high rates had nothing to do with the thesis.
No, and that's part of the problem. And if you recall, even late last year, there was another mini little spike in rates, and that was caused by the sanctioning of the Chinese shipping company Costco by the Trump administration on their tankers for hauling, transporting Iranian crude, and that caused a mini spike. And I'm glad to have that, but that was not why I bought that. I wasn't anticipating that happening. I wasn't anticipating the super contango. This trade is going to be, or trade, I don't want to call it that. This is going to be a 3 to 5 year process. When I get involved in these things, I understand in my mind I'm planting trees and I'm giving these things 3 years to play out, 5 years to pay out. Why? It's going to take time. You know, the thesis was on its way to being created. We had big spreads in after IMO 2020 came in January 1st, 2020. Uh, I explained in the video, if you got a 15-year-old ship, an 18-year-old ship, you're not going to spend millions of dollars to put it in a shipyard, have it resurveyed, cut a hole in the side, put a scrubber on so that you can save the $200 per ton between high sulfur fuel oil and low sulfur fuel oil. So those ships are going to get scrapped. So the super contango comes along, and most people don't even know the difference between backwardation or contango. This is where people already start getting out of their circle of competence, and they don't understand what causes that, what those mean, and then they think that was the thesis of the trade. That was what some of these Johnny come latelys on some of the videos I saw were they didn't even talk about the cyclicality of the business, the cycles, how they're 10 to 12 years long, whatever, that there's regulations that are coming, just like when double hull tankers came in 15, 20 years ago, that caused a spike because of the same difference. You're going to scrap ships that are near the end of their life, and it caused a shortage as they move to double hulls. So not understanding that, if you're going to get involved in that, why wouldn't a guy just get like the main shipping companies that existed for the last 20 years and go through all their 10Ks, go through all the annual reports, kind of understand the cyclicality or what causes rates, understand the business as best they can. I mean, there's so much, that's why you look at a guy like Harris Kupferman, he's done yeoman's work writing on his website. Why you go and Jay Mintzmeyer he interviews the shipping guys. You interviewed Bugby the other day. So, I mean, if you're not even knowing who these people are, if you're not listening, if you're not investigating, I don't know how you can even get involved. You're just basically gambling at that point. And, that's kind of one thing I do want to say, though, is I like what you said. I just want to key on one thing because I think it's important for people to understand. These are not baseball cards or pitching pennies. When you buy shares in a company, you become part owner in that company. So should be analyzing it like you would analyze any business. You are looking for, and you could think like a private equity person. I'm looking for a turnaround here. I'm looking for my portion of the anticipated higher cash flows that could be distributed to me over the next 3 to 5 years as this business recovers via dividends, debt payback, or share repurchases. The Walter Schloss things, 3 or 4 things you can do. The 3 things we want shipping companies to do with our cash is pay down debt, number 1, buy back shares, and then pay dividends. Prefer not to have that for tax reasons. But the first 2 things raise our equity in the company. We're paying down debt, that raises equity. If you buy back shares, that's raising your equity in the business. So I don't think people think about these things like businesses. They think about, well, I'm flipping a baseball card. I hold this, the average holding period for companies has went down tremendously since we've had low commissions and the ubiquity of online trading. So I think if you think, I'd like to just give one example. I know I'm talking a lot here, but I have a
Oh,
perfect example of what I'm talking about.
it's perfect, perfect.
So
Keep talking.
one of the companies I have in my newsletter, I'll just give it up. There's a company I followed, and I started following this maybe 10 or 15 years ago. It was a company called Ram Power. And this is when the first green wave of green energy came along. And what they did was Ram Power was owned by a guy, his last name was Ram, I think. Anyways, there was a resource in Nicaragua. It was a geothermal resource. They spent probably $250, $300 million drilling the resource, building a power plant there, and then putting it online. The problem is that it's an operating power plant, which is still operating today. The company was too far in debt. So I had originally owned shares in it. I could see they just weren't going to be able to, the cash flow was not sufficient to service the debt. So the thing ended up going into receivership, bankrupt, let's say. That doesn't mean the assets go away. It's just going to change ownership now. So I was already out of the company before that, but I kept watching it. So it goes through the bankruptcy process. The debt gets wiped away. The debt holders now own the company. New equity is issued. So now you don't have this overhang of debt. So, but still the bad taste of the company is still in people's minds. So then I start following it. I've worked in Central America. I've been in Nicaragua, Honduras, Guatemala, all these places. I did power plants down there. So I have competency in this. So I'm looking at this thing. You can follow it. You can look up the Nicaraguan grid. You can see the things producing hour by hour. And so as it came back with new management, with the debt wiped out and new equity, now it makes sense. Now you can look at, okay, this is a real business that's spinning off cash flow, and the cash flow yield is, well, I haven't done a recent calculation, but at one time after this recent crash here, I think the cash flow yield free cash flow yield on the company was like 20%. So you have a company because it got cut in half. It's a business. It's a long-term business. So you say to yourself, what's this is a bargain for me. I'm be able to buy this cash flow for this much money. And that's how I try to look at these things. It's a turnaround. So I loaded up on the company when it was down 50%. They just came out with earnings last week. Everything's fine. They just commissioned 2 new hydro plants that they built down in Peru. They're doing fine. The thing's cash flowing. Uh, no problems. They got through the construction and commissioning, which is difficult sometimes. Everything's running, and the thing's just spitting out cash. So, and now the share price is recovering. As it will draw interest. So I think people don't look at these things as businesses that what am I going to get out of this business? Yes, share appreciation, but you have to look at it from a business sense. If they have debt, are they able to pay down debt in the sense of these tankers? The super contango has just given a longer runway for the thesis, which is lower supply and things like that to play out for these tankers. Because, I mean,
Well, I like how you said on your video. I think you said it that the super contango gave them the opportunity to heal.
exactly, exactly. So I think that's what people miss. And if you don't look at it that way, then I think you're going to be more apt to get spooked out as soon as something happens. Because if I look at it this way, say if I could buy this Polaris Infrastructure, which is the company I'm talking about, I don't know what the market cap is. Let's just say, it's probably undervalued by about, I don't know, 30 or 40%. But if I could buy the thing lock, stock, and barrel, I would. And because if I can get a 20% cash flow yield on something that has long-term power purchase agreements paid out in U.S. dollars, Nicaragua had some internal political strife about a year and a half ago, but you know what? The power never went out. They never stopped paying their bills. The electricity flowed, and the bills got paid. So, I mean, if you get to the point where even in Venezuela, for the most part, it's spotty, but you still get some electricity. So, I mean, that's what I'm trying to say. You have to analyze these things. You have to write the stuff down. You have to understand why you're putting your money into this and what your expectations are, a reasonable expectation of what can happen, and how you, as a business owner, you're part of owning this business, what you're hoping to achieve out of it on your return, vis-a-vis debt pay downs, share buybacks, dividends, whatever. That's
Right.
kind of how I try to look at it.
Yeah. And going back to what you when you were saying that you not just with this tanker investment, but in investment in general, you like to give them 5 years to play out. And what I find interesting about the tanker investments, yes, we like to go back and look at the 2003 to 2007 super cycle. Now, this time, what's interesting, and you also talked about it in your video, is that IMO 2030. Yes, everyone has been focusing on IMO 2020, but IMO 2030 is interesting because of the uncertainty that you said. These ship owners, even if they wanted to order ships, they just don't know what to order because of that. And so it could be interesting that if we did enter the super cycle in 2019, it could last quite a while until the they have some kind of certainty as to what the future ships are going to look like.
Yeah, exactly. I mean, these guys like to build up ships and build their fleets up. They've demonstrated that if you give them money, they'll build ships. But if you've listened to any of the recent conference calls, whether it's DHT, Euronav, DSSI, whatever, they've all said the same thing, and they've been asked specifically. Now, of course, people, can lie, I guess, but the consensus thing is they know that they have had financial impairment with debt, and they understand this. So the first thing they're going to do is pay down debt. It's like somebody else said, I mean, who's going to go out right now and spend, $100 million on a very large crude carrier? And to your point, I don't know what kind of fuel in 2030 I'm going to have to use, what type of engines, what are there going to be the restrictions on greenhouse gases that they're pushing for? I don't know any of this. And now we have even more uncertainty because God only knows what the economic ramifications are of COVID, and how that's going to play out. And that's adding more uncertainty. I think Bugby even said this in your interview or another interview. He said these tanker markets do not, whether it's product or crude, they don't like uncertainty. They don't like, You know, everything is like, you know, just in time. So if you get to a port and they can't unload you, or you know, you go somewhere and they don't have fuel for you, they don't have the right bunker fuel, or whatever the case is, or you're sitting out there and you're racking up demurrage. All these things can happen. You know, before we had all this uncertainty, it was pretty well-oiled machine. You know, you load up a cargo, you go. Now we have a lot of uncertainty here. Then you add further uncertainty, not knowing what the regs are going to be for certain. What bank? The banks have ran away from financing new ships. What bank is going to say, "Oh yeah, I'm going to find here's 50, here's $100 million, go build a ship," and we don't know in 10 years, or by the time the thing gets built in 2 years, 8 years of service, the thing may be obsolete. I think that's how I'm looking at it. Now I may be wrong. They may just say, you know what, we're going to throw caution to the wind and we're going to scrap these regs and just everybody do what they want in the interest of recovery. But I don't think that that's going to be the case. I think that this ESG movement and the green movement, there's so much invested in it politically, economically, and socially around the world that this is going to continue. And so that's my view on it.
And another thing that I don't think people are focusing on is if you go back to the last super cycle from 2003 to 2007, the stock prices ran really high. As Kapi said, the front line went up like 40 or 50x. So the shareholders were really, really happy during the time. Now, even though we're making money, the shareholders are not happy. The share prices are down. I think that before any sort of ordering happens, you gotta get you have to get this sector to be a bit hot and crowded, which is very far from where we are today.
Oh, absolutely. I mean, like I said, I mean, listening just to the conference calls, the main objective of most of these operators that I heard, at least from their managements, was that their intent was if they had excessive debt, they intended to pay down debt, which is fine by me. That's accretive to me as a shareholder. I'm fine with that. So I think you're right. When you get to the euphoria stage, that's when they'll be flush. The past will be forgotten. You'll have everybody saying this is a new era. It's not like it was before, even though you can look back through history and understand it's a cyclical industry, and that's when the ship ordering starts, the yards start opening back up. Everybody wants to throw money at them. It'll be time to run away from this sector then. So I think that's kind of what I'm looking at down the road. And this thing's going to be volatile. I mean, shipping rates are very volatile. They are seasonal in some cases based on what you're looking at on class of ships. And I mean, I'm not necessarily the expert. This is just my understanding. I mean, I'm a generalist. There's guys that know way more about it than me, like Mintzmeyer and these guys. But that's just about my knowledge of this. So this is like one position that I have among many industries or countries that I'm interested in, and that's I agree. This things go from completely blown out to euphoria. I mean, there's even a guy that's on Twitter. I can't remember his name, Calvin Froge. He was like tweeting every day. He was updating things, and he was like one of the biggest tanker bulls, and he's taking a 30-day hiatus from Twitter, and that tells you right there when you got guys, it just needs to calm down. The tourists will go away. This thing will continue to heal over time, and scrapping of ships will continue, and no ships are getting built, and at some point, that's going to force rates higher. I mean, people don't realize even though rates came down, they're still higher than they've been over the last many years for this time of year. So, and we may see rates dive again. I mean, this stuff is very volatile, and I think people forget that too. So if you're just going to trade on the headlines, and you're going to be, I think you're going to be disappointed. And you're going to get chased out.
Well, Copy just did a thread on Twitter talking about TK. They just reported. He was saying how in Q4 TK did like 100 million of free cash flow. In Q1 it did 150, and in Q2 it's about to do 200. So if you add it all up together, we're talking about 450 million of free cash flow in 9 months, and the stock is trading for like a market cap of 500 million. I mean, it's just insane. I don't think I've ever seen anything like this before.
No, you're right. I think the retort would be the red team would say, well, this was an aberration. and going forward, the tankers are going to perform just like they've always performed, which is you had your little starburst, and they're going to go right back to rates being break even, and they're going to struggle again. But as we talked about earlier in this conversation, that's really not the longer term thesis for the cycle. The cycle, I feel at least, is in place. And the super contango just kind of, like I said, created some runway and some healing process, but it wasn't the main story. So I think that's what people did. I mean, that's what makes the market, right? It could be very wrong. It could be, go in the cellar for another 5 or 10 years. I don't know exactly, but that I think is the bear argument that okay, you had your little fun for a few quarters, and now rates are going to go back to their recent historic lows, and then you guys are just going to bleed the cash away. But we'll see what happens. That's not my thinking, just based on what we've talked about previous earlier in the interview.
Yeah. Okay. So that's fantastic, John. Okay, let's talk a little bit about your newsletter because I want to find out more. So it's actionable intelligence alert. Like, is this a pay newsletter? What is this?
Yeah, I mean, I started it about a year and a half ago. I've been off and on the internet with blogs and stuff since 1998, and I decided to start the newsletter. I mean, the newsletter is not. It's looking for, like I said, how people want action. So it's like, okay, I try to put forth ideas that I believe are asymmetric ideas, and I every month it comes out once a month. I sometimes come out with a new idea, not every month, because if I don't have an idea or if I don't feel like there's anything that's actionable or anything that is worthwhile, I still have a market commentary. We follow the companies that we've previously recommended, and we update them. So I'm very partial in this particular newsletter for what we're talking about, and recognize this is just what I'm doing. I mean, I'm not a financial advisor. I try to make that clear to people. These are what I'm doing. These are my ideas. I have my money in these things myself, and I'm looking for, things that, as we outlined earlier, that have a 3 to 5 year situation to play out, and that can possibly give us, 5 to 10 times on our money. And I have done that many times in my career. Now, the problem is that most people don't have a 3 to 5 year time horizon, so that's what makes it not for a lot of people. And number two is when I make a suggestion, um, I anticipate that people don't put their own money into it until they actually do some of the research themselves and make themselves comfortable with the idea. Because some of these things, I use the example in one of the issues where I don't know how familiar you are. I know you're from Poland. I don't know how familiar you are with baseball, but there used to be a play. I used to play this game when I was a kid. It's called Stratomatic, and it was a card game, and they had stats for different players. And one of my favorite players was a guy named Dave Kingman. He played for the Cubs at one time and the A's. He was what's known as a three outcome player. He would either strike out, which he did most of the time, walk, which he didn't do that much time, or he'd hit a home run about every 9 or 10 times at bat. And monstrous home runs. He was a 40, 50 home run guy. And that's what we're looking here. We are going to have, not everything's going to play out and come to fruition, but we position size, encourage proper positioning, uh, proper you're using risk capital that is money that can go to la la land. These are not investments. These are burning matches and speculations because we're speculating on the future. A lot of times these companies or these industries that we're getting involved with, we're speculating on a change in their future. We're not necessarily buying low cash flow cigar butts like a Graham and Dodd investor. So that's what we're focusing on. So we're looking at things like uranium. We're looking at things like precious metals, gold specifically. I try to focus on a lot of countries that are out of favor. That's not for most people, but I have an opinion on several countries around the world that are making changes that I think are positive and that are investable or you can speculate on. And that's what we're trying to do. And I think that if we get wiped out, strike out on half our deals, but you know, it's like I do angel investing too, and you do 10 deals, you expect 8 of them to go out of business, one to be marginal, and one makes up for everything else and then gives you still the above average returns. So that's kind of the thesis. It's not investments, it's not financial advice, it's what I'm doing, and it's just to stimulate ideas and give people a different perspective. Because let's be frank, there's a lot of people like on YouTube, and these guys want they want people want action, but I want people to understand if you're going to get into these things, learn from some of the mistakes, and at least have a view and an idea. And here's some ideas, but here's the background behind them and why there's a possible change and why there could be a re-rating. I mean, uranium is a perfect example for to speak of one. So.
Now, the actionable intelligence alert, are you running it through Seeking Alpha or?
No, I just run it myself. You know, basically have links on my YouTube videos and stuff like that. People can check it out. Um,
And what's the cost to it?
that's $79 a year.
Okay. All right. Perfect. So yeah, John, thank you for telling us about uh, your thought process and talking about your newsletter. I really appreciate that. So, is there any other concluding thoughts that you have before we finish it up?
No, I mean, I really appreciate you bringing me on, and I've been listening to your videos. I don't want to have a mutual admiration society here, but you've been really getting some outstanding guests, and you're an outstanding interviewer. So I definitely appreciate being on here, and I expect that you will be having a lot more subscribers coming down the pike pretty quick. I enjoyed your Bugby interview and some of your other interviews. So yeah, keep up the good work. I appreciate it.
You know who, just before we go, who I'm trying to interview right now is, and you'd be surprised, I actually am trying to get Nordic American tankers on.
Really?
Yeah, and you know why? Because the smart people that know about shipping, we all know this is the most overpriced tanker, and we wouldn't want to put our money into it. However, there's something that they're doing right. Like, I want to talk to this CEO, and I want to be like, what is it that you're doing right? How are you attracting all these people? You know, uh, like, what's your secret? So we'll see. We'll see if I can have him on.
Yeah, that'd be great. I mean, I have an idea that he's a pretty good promoter and he got on Kramer and stuff, but yeah, he's that I think that's part of it. But
Yeah,
anyway,
but
yeah, that would be interesting.
it would be interesting to pick his brain, and maybe other oil tanker CEOs can take parts of it and learn, So,
Absolutely.
yeah. All right, cool. Thanks a lot, John, and we'll talk later.
All right, thank you, sir.